Most people go through life using banks, credit cards, and digital money without ever questioning where it comes from, how it's created, or why the banking system seems designed to keep people confused. Henry Ford once said, "It is well enough that people of the nation do not understand our banking." So hit that like button, subscribe if you love videos about money and investing, and let's begin. Most would say safety, interest, or stability. But if you actually look at the numbers, something disturbing becomes clear. Keeping your money in a bank is a losing deal. Banks pay you almost nothing for holding your money. A typical big bank like Citibank often pays 0.01% to 0.5% interest on savings accounts. Meanwhile, inflation is typically around 2.5 to 3% and often much higher. What does this mean? Your money grows at 0.5%, while prices rise by 3%. You're losing 2.5% of your purchasing power every single year. Your money is shrinking. $1,000 today will feel like $900 in the future. So why do banks offer such terrible interest rates? Because they're not paying you for the privilege of storing your money? They're using your money to make huge profits for themselves. To the banks, your checking account isn't a service, it's raw material. Now for the big secret: banks create money. Most people believe money is printed by the government or the Federal Reserve. This is only partially true. The shocking reality is that every commercial bank in the world has the legal right to create money out of thin air. The bank is only required to keep 10% as reserves. It was created when you borrowed it. This system massively benefits banks because they earn interest on money that never belonged to them in the first place. Let's talk about a strategy the rich understand, but average people do not: borrowing money to make money. Meanwhile, inflation was around 2.5 to 3%. Do you see the trick? If you borrow money at 1% in an economy where money loses 3% of its value, you are effectively borrowing free money. The bank is losing money on that loan. Zuckerberg is gaining money for simply playing the system correctly. This is why billionaires use debt constantly. They borrow at cheap rates and invest their own money in higher return assets like stocks, index funds, real estate, or business expansion. Even depositing that borrowed million into a savings account, earning 2.4% would yield more than the cost of borrowing it at 1%. The wealthy treat debt like a tool. The poor treat debt like a burden. That's the difference. Here's another truth: banks reward the rich and penalize the poor. Banks are businesses. Their job is to make profits, not to help you. Because of this, they prefer lending money to people who already have money, own assets, have businesses, and are low risk to default. So the richer you are, the lower your interest rate, the better your loan terms, and the more credit banks offer you. This is why wealthy people borrow money at 1 to 3%, while struggling families pay 18% on credit cards, 25% on personal loans, or even 300% on payday loans. The system is built on a simple principle: if you need money the most, you will pay the highest price for it. If you don't need money at all, banks will give it to you cheaply. It's unfair, it's frustrating, but it's the truth. The rich become richer because the system is designed to protect lenders, not borrowers. Finally, let's talk about the bank's most powerful weapon: credit cards. Credit card interest is the most dangerous form of debt in the modern world. The average credit card interest rate is around 20%, sometimes more. At 20% interest, your debt doubles roughly every 3.5 years. And here's a shocking statistic: 70% of Americans with credit card debt admit they cannot pay it off this year. 56% have carried their debt for at least a year, and 8% have no idea when they'll ever pay it off. This is how the bank wins. Credit cards feel easy: swipe now, pay later. But the psychology is deadly. You feel comfortable spending money you don't have because you reuse to a lifestyle you can afford. The bank knows this. They're counting on it. Credit cards are not designed to help you. They are designed to trap you. But used responsibly, paying the balance in full every month, They can help build credit and unlock better financial opportunities. The tool isn't evil, but misuse it, and it becomes a financial time bomb. So, the modern banking system is built on 5 hidden truths. Your savings lose value every year in a bank account. Banks create money from nothing using your deposits. The wealthy borrow money at low rates to get richer. The richer you are, the better financial deals you get. And credit cards are engineered to keep people in debt forever. Once you understand these truths, you stop seeing banks as financial guardians and start seeing them for what they are: profit machines that rely on public ignorance. But now that you know how the system works, you can play the game the smart way. Avoid high-interest debt. Don't let your money sit idle. Borrow cheaply when it makes financial sense. Invest in assets that beat inflation. Stay financially educated. Banks rely on people not understanding money, but now you do. Thanks for watching. Hit like, subscribe, and drop a comment if you want a part 2, where we break down how the Federal Reserve actually controls the economy. See you in the next one.